Have you noticed a recent slowdown in the market? You're thinking maybe that might be attributable to bubble conditions and that we're headed for a market crash. Well, I'm Nick with the Iannitti Realty Group, and real quick, want to come out with a San Diego housing market update. I just did a full housing update video where I go into detail why we are not in bubble conditions right now and why we're not headed for a market crash. But real quick, I just want to give you what's locally going on there in San Diego, and also just obviously a little bit of data going on around the nation here. We're looking at seller traffic that is obviously, still on the weak side again with low inventory. We also have a lot of people worried about rising interest rates and them leaving a situation where they're in the threes or the fours of a mortgage rate and then stepping up to a new mortgage on a home in the fives doesn't seem appealing to lots of folks. We've actually seen here just through to showing data, especially out west, definitely some slowdowns here. So if you are a seller and maybe you had someone in your neighborhood back in February who sold their house with 15 offers in one day, maybe not the same market now. Things are still selling, just taking a little bit longer. Looking at our average days on market, definitely things are taking a little bit longer to sell, but things still are selling because look at our buyer demand here. We still do have stable to very strong buyer demand. So keep that in mind. Looking at San Diego update though, obviously, we had another increase in sales price up to 855. Remember, these are all median numbers for all types of housing over the entire county of San Diego. Okay. Active market time was 9 days. That was up a little bit. So realize that this is, again, you're seeing this in San Diego. Things are taking a little bit longer to sell. Okay. Price per square foot is up. Months of inventory, we're still at less than 1 month of inventory, and that's been going down. That is the real problem that's been persisting. Of course, obviously, remember everything above the line are lagging indicators, everything below the line are leading indicators. This is telling us where the market is going, and realize, a lot of red ink over here. Things are definitely selling less. This is actually kind of getting a double whammy right now. It's due obviously to low inventory. We have about a 5 million home deficit here in the United States, but we've also recently seen 2 percentage point increase in the past 2 months in mortgages. That has definitely had a little bit of a wet blanket effect on a blazing hot market. So again, though, remember I've said this in years past and months past, sometimes when you're moving at 100 miles an hour and you slow down to 60 miles an hour, it feels like you hit a brick wall. It feels like you can't even stop, right? But you're not. You're still doing 60 miles an hour. You're still doing freeway speed, right? That's the same thing we're seeing in this market. We were going red hot. We've had these rates rise, and now it's caused a little bit of pullback in some buyers. Keep in mind that also means for every 1 percentage point increase in mortgage, that decreases a buyer's purchasing power by 10%. So sometimes that little bit of extra money they were going to use to get to a different size home or a different location, maybe they're not able to do that now with the increase in interest rates. So anyway, if you have any questions about what these numbers mean, what's going on in your neighborhood, is this a good time to buy or sell, or what my home is worth, I'm more than happy to have those conversations. Just reach out. Thanks so much for tuning in, and remember, who you choose to negotiate for you absolutely matters.